Great. So we've understood the concept of warehouse banking and we've understood the concepts of clearinghouses. So now let's understand the concept of fractional reserve banking and see how fractional reserve banking affects the supply of money in an economy. So we've said that the payment system in Metrocity has evolved to exchanging ownership of deposits rather than cash. So people are exchanging checks, which is nothing but a title to a deposit. Now, some financial wizards in Metrocity notice that deposits in bank vaults are barely touched and the costs of payments has dramatically reduced in the economy. So another interesting idea is born. Now, instead of depositors lending money and taking on the credit risk, the risk of the borrower defaulting, putting the lender in financial losses, the financial wizards thought that what if banks could start lending? So banks do not have actual cash deposits of their own account, but they could create deposits on the behalf of the borrower and loan these deposits to the borrower. So the borrower would have deposits in the bank without actually having any cash deposits with the bank. So this is an important concept. And let's explain that concept with the help of an example. We go back to our friend Yuri. So let's assume that Yuri is now in need of money and approaches Megabank's credit department for a $5 million loan. If the credit department in Megabank approves of the loan, they create a $5 million deposit account for Yuri, which he can draw upon anytime he chooses. Now, in exchange, Yuri signs a loan document that is essentially an IOU. So this new innovation changes the entire banking system of Metrocity. When Yuri draws upon his deposits through checks, Megabank loses cash to other banks through Central Bank. The cash doesn't belong to Megabank but to the real depositors, who are compensated by Megabank with deposit interest or free facilities such as free checking accounts. So let's now look at the implications of this banking innovation on Metrocity's economy. Prior to the lending innovation, deposits in Megabank were with one-to-one correspondence with cash in the vault. With the creation of deposits through the lending facility, the one-to-one correspondence is no longer valid. The depositor's claim is now on the general assets of the bank instead of the cash in vault. The cash in vault now becomes a general reserve. This general reserve, which is now but a fraction of the total deposit of a bank, helps ensure that a promise to pay the depositors can be met. This new type of banking is called fractional reserve banking and has huge implications on the quantity of money in Metrocity, which we will look at in detail.